We have a saying in our space, accredited to Lynn Alden, nothing stops this train. It generally refers to money printing, debt servicing, massive liquidity injections that we've seen over the years. I think we're going to see a ton of that in 2026. It's basically, Bitcoin acts like almost like a levered bet on technology stocks when it comes to price, not adoption. And I think when you multiply that times the regulatory clarity, the interest from institutional investors who've securitized Bitcoin and other crypto assets, I think it's going to be a great few years for Bitcoin and the crypto markets in particular. There's been points this year where Nvidia was more volatile or Tesla was more volatile than Bitcoin. Bitcoin historically has been a 50, 60, 70 vol asset. It's shrunk to probably a 30 vol asset this year, which is actually quite impressive. Look, we had basically regulatory overhang, which I think was holding Bitcoin down significantly, probably to the tune of 50%, which is why we saw a big spike. We expected lower interest rates. We expected more money printing. We didn't get that. So when you actually factor all of that in, the fact that we're riding that kind of 90K range for Bitcoin really does make sense to me. And I think when you combine that with the fact that we're starting to see significant stimulus, we're going to see real quantitative easing. We're seeing quantitative easing light right now. The Fed is starting to buy its own bonds. And I think demand for government debt is going to fall significantly next year, along with lower rates. So all of this bodes well for higher vol assets, including the likes of Bitcoin.